This year, it won't be Santa Claus coming to town, it'll be the repo man. More and more repos are popping up at these used car dealer auctions. Repos are not good cars, and often you'll see stuff like that, floorboards ripped up, pieces just off the car. There's more of it. Just chunks of cars just gone. There are not enough tow truck drivers to get all of the repos that are out there. The scary thing is we aren't even at peak repo season yet. The car you're driving right now could have been repossessed and you don't even know. And there's a saying in the repo world, no metal, no money. So that means if they don't pick up the car, they don't get paid. And we've all seen these repo videos pop up on the internet. Being a repo man is very, very dangerous. Repo man don't care. He's gonna come get your car if you haven't made your payment. All of these cars I'm selling on my dealership could be repos and you would never know. But just so you know, they're not. All right, and we're talking about repos. This is what repos look like. The whole side of this Honda is smashed up. Repos are not good cars. They come in like this. Dealers don't want to buy this. And this is what happens at these auctions. I don't know if you can hear it revving behind me. Transmission just went out. He can't move forward right now. And that car's going to sit there until they push it in. You know what? Let me go help. All right, so this is our job now, to push this car in because it is not moving. Why couldn't it be a Honda Civic? So not only do you have cosmetic issues that are coming in with these repos, but you have stuff like this. It says, "Haul, it's not going to start." Don't roll down windows. They may not go back up. And when I say may, they're not going back up. There you go, one white smoke. White smoke generally means head gasket. This is a repo, so people who are driving these things, they're not going to take care of these cars. If they're not going to take care of the cars, bad things are going to happen to them. And there's a saying that's in the repo world, and it goes, no metal, no money. And what that basically means is that these lenders, whoever's paying these repo drivers to actually go get these cars, if they won't produce the car, the metal, then they're not getting paid. And this is why you'll see these crazy videos of these repo drivers that are actually out getting the cars, and when a customer even threatens violence, they pull a gun on them. These recovery drivers, they're still going after the car, because the way that this system is put in place is that they're not making any money if they don't deliver on what they're supposed to do. No metal, no money, no car, they're not getting paid. And there's no wonder why there's actually this massive shortage of repo tow truck drivers. That's because they average making $40,000 to $50,000 a year. And you got to think how dangerous this job is. It's not worth the actual money that they're making to go get these cars when they're having their lives really threatened from people who don't want their cars taken. It's actually gotten so bad that there are some states that are trying to implement laws to force repos to happen during the day and not at night. They're trying to actually outlaw the repossession of vehicles between 9 p.m. and 6 a.m. And they feel like if they do this, it's greatly limit the violent acts that are going to be associated with these repossessions. And if the cars can be repoed in the daylight and there's still people around, then maybe they can actually cut down on the risk that's associated with these cars getting repossessed. And these repossession drivers, they have no boundaries. And the way the system is set up, it basically makes it to where they have to get the car at all costs, because if they don't get the vehicle, they're not getting paid. I just saw a news story recently in my area where repo drivers were actually banned from an amusement park for picking up the vehicles there. And I know you've all seen these videos just blowing up on the internet where people are getting their cars repoed. It doesn't matter where you are. You could be at church, you could be at home, you could be at an amusement park. Repo man don't care. He's gonna come get your car if you haven't made your payment. So here's a big issue right now. We're not even in peak repo season. And this is something that the car market's going to have to deal with in the next few months. See, what happens is as tax season hits us, and it's going to hit us into February, beginning of March, what happens is people who generally don't have a lot of money, they're living paycheck to paycheck, now they get their tax refunds back and they've got $2,000 to $6,000 that they can spend. So they go out and they buy a vehicle that they cannot afford. They'll go to a buy here, pay here dealer, or they'll go to a bigger dealership and put that down as a down payment. And what they'll figure out a month, 2 months later on is that, you know what, maybe they shouldn't have bought this car, and they really can't afford the monthly payments. They were able to afford the down payment because they had that money, but they didn't think long term where they're going to have to continue to spend money on this car, continue to make these monthly payments, continue to pay this insurance on this vehicle. And what ultimately happens is a lot of these people will end up losing their car not but 1 month, 2 months down the road. And I talked to a lot of buy here, pay here dealers, and they are very, very busy about 2 months after tax time hits, because they just go back and all these cars that people bought with their tax refunds, they put the down payment down, they make one payment, and then right after that, 2 to 3 payments down the road, they just stop paying. And you know what? Repo man goes and picks up the car. So now when a lender actually repossesses these cars, they come to somewhere like here, like a used car dealer auction, where used car dealers will actually purchase them. But here comes in the part of it that most people don't actually realize. So if you get your car repossessed and you actually owe more money on it than what it brings at these auctions, and most times that's going to be the fact, because a lot of these repos are not going to bring as much money as some of these other vehicles, because dealers like me, we don't actually like buying repos. So it's just the fact of the auction that these repos are going to bring less money. So when we're in that situation where the customer owes more on the car than what it brings, and that customer is still on the hook for the difference, and at that point the lender can actually go after that consumer for the difference, whether it be $2,000, $3,000. And in this market, as the wholesale prices are going down and these consumers paid so much for these vehicles, it can be tens of thousands of dollars worth of difference that these consumers are then liable to pay. But here's the problem for the banks. These consumers, they couldn't make their payments on the car to begin with. So if these banks pursue these customers and try to get the money out of them, they're probably never going to see that money, and it's really most likely, in most cases, just going to be reduced to a write-off. So another thing that's about to happen is that we have Christmas. We have the holiday season just around the corner. So now what's going to happen? People, unfortunately, this year, a lot of them are going to have to choose between Christmas presents for their children or making their car payments. And what we already know is that credit card balances are on the rise. And at some point, people are going to be pushed over the edge where, you know what, they don't have any more availability on their credit cards to be able to actually pay their bills, and something is going to get cut. And you know what, coming up is Christmas, and I absolutely get it. I'm a father, and I can tell you that I want my son to get exactly what he wants for Christmas. I want him to have that Polar Express train. I want him to have that fire truck. And there's going to be a lot of people in the situation where they're looking at their child and they have to decide, you know what, I'm just going to have to use my credit card. I'm going to get them what they want. I'm going to make their Christmas great, and we'll just figure it out later. And unfortunately, what happens is that kick the can down the road kind of mentality, swipe the credit card, oh, we'll be able to figure it out later. We'll be able to pay it off later. And sometimes the money's not there. You can't pay it off, and something's got to get cut, and then payments fall behind. And when your car payment falls behind, it gets repossessed. So with all this, it's very, very sad to think about, but I really think that we're going to have even more of an explosion, even more of an uptick in repossessions right after Christmas time. And really, you could be driving a vehicle that's been repossessed right now and you would never know about it. See, these lending institutions, these buy here, pay here dealers, these dealers that actually go and pick up these cars if consumers don't actually make their payments on it, they don't have to report it on any vehicle history report, anything like that. It doesn't actually follow the car's registration. So after they go and pick up this car, they can literally put it right back on their lot and sell it to the next customer, and that customer would never even know. The only way you could actually figure out if your vehicle that you're going to a dealership to actually purchase is a repossession is you have to actually look at the paperwork. And in every state, the title is going to look different. They're going to have different signatures on it, but somewhere on the title, you're going to have information showing if there is a lien or not, and if it's been satisfied or not. So if you look at the paperwork and you see that a lien has actually been started and there's no signature saying that the lien has actually been satisfied, then there's actually going to be additional paperwork with that title showing that that vehicle has been repossessed. But now here's the problem. Most dealerships don't actually have their titles in the building. So if you go and request to see the title, the paperwork of your car, they're probably not going to be able to provide it to you. And the reason why is because most dealers do not pay cash for their vehicles. They don't own their vehicles outright. They actually borrow money from what's called a floor plan to actually be able to purchase their inventory. And so what happens when they go and buy this vehicle at auction, that title is not sent to the dealer. It is sent straight to this floor plan company as collateral on the loan that these dealers are getting from the floor plan company. So when you're going to go buy a car from a dealership, that makes it almost impossible for you to know whether that car is a repossession or not. All right, we're getting tons and tons and tons of views every week, but you're not hitting the subscribe button. Let me know what I need to do to get you to hit that subscribe button. Please do it. Please do it and like this video. Thank you. So now, how do I think all of these repos being brought into the system is actually going to affect the car market? Unfortunately, not very much. And the reason being is because even with this explosion in repos coming into the system, these big new car dealers, they're not selling very much right now. And if they're not selling very much, then they're not getting trade-ins. If they aren't getting trade-ins, they don't have inventory to actually send to these car auctions where car dealers like me, small used car dealers, that's where we get our inventory. So less trade-ins, less inventory in the system. But with you having these repos coming in, it is adding a little bit of extra inventory, but it's a lot of inventory that we don't want because a lot of these repos are trashed. Even with the explosion of these repos coming to the system, it's still just a tiny amount compared to the amount of trade-ins that we've lost to the system because these big car dealers, they're not selling. But even though the amount of repos being pushed into the system is not really going to affect the market, the actual repercussions on the bank can have an effect on the market, and I'll explain why. So if we have these repos that are exploding right now, if the banks are having to take more write-downs because they have more repos, more delinquencies on their books, then that's going to cause them to get tighter with their lending. As banks get tighter with their lending, fewer people can actually be qualified for loans, and when that happens, then fewer people can actually purchase vehicles. Because really the only way that people are buying these more expensive vehicles, these new vehicles, is by getting loans on them. And if the banks get tighter, then less vehicles can actually be sold. Stuff like, all right, touch the mic. And often you'll see, touch it again, drivers, these repo car, dangerous. And the average repo guy, this year it won't be Santa Claus coming to town, it'll be the repo man. I feel like I tripped on a rock right there. Let's try it again. Just see whichever one's better. This year it won't be Santa Claus coming to town, it'll be the repo man. I didn't point the hat, I need to point the hat. Sorry, this is difficult, I'm sure. How do we make this not so terrible?